Hello, hello. I believe that I am streaming live right now. How is everyone doing today? Mhm. Doing this morning, I'm doing fine. Waiting to see if we're going to get some participants to actually come in before I get started. And I will today, what we're going to cover while we're waiting to see if we're going to have some individuals join us is we're going to go over mid-year, what we should look at. We're in the second half of this year, right? I just feel like each year goes by faster and faster. I don't know if it's just me. I don't know if y'all feel the same way, but it just feels like the year is flying by, and every year seems like it flies by faster. So, but what we're going to go over today are some things to look at in your financials to make sure that you are on track with your financial goals for the end of the year. So it's going to be reviewing your mid-year financials. So we're doing a mid-year financial checkup. And so just to get into it, so by doing this mid-year financial checkup, this will help you to understand if your business is on track for meeting its financial goals and making sure that your financial accounts are not being over or understated. And so today we will go over four areas you should focus on as we enter into the third quarter. Okay, so I'm gonna go ahead and get started. As you come in, if you want to leave any comments or any questions, just jot it in the chat, and I'll take a look over there, here and there, to see if we have some questions, and I will answer them to the best of my ability. Okay, so let's go. First, let me introduce myself. My name is Chavis. I'm a financial strategist that works with home care agency owners. I help home care agency owners increase revenue by 25% or more with organized accounting and financial strategies. So that's a little bit about me. My background, I've been doing this for years. So I do know a little something about like your financials, about analyzing your company's financial books and making sure you're on track, making sure you're meeting your goals, making sure money is coming in and the money that is coming out is less than what's coming in. Okay, so the first one we will go over is the first thing you should look at when you're doing your financial checkup is review your year-to-date financial reports. Okay, so two reports that you should look at are your profit and loss statement and your balance sheet. When you look at these reports, it's good to go ahead and analyze the reports. Um, what I do with my clients, I'm always comparing last year's numbers to the current year numbers, and that way you can see like the months, like which months have been good, and making sure that you're on track to when you're receiving your revenue. For instance, if you're looking in at your revenue, you want this month's revenue to be greater than last month's revenue. And if this month's revenue is not greater than last month's revenue or last year's revenue for that month, if it's not greater than last year's revenue for that month, then it's good to go in and analyze and just to track what services was good? What services did receive an increase in revenue, or did you receive the revenue from? So you'll know what it allow you to gain tactics or see what tactics you need to incorporate in order to um, receive more revenue in that service area. For instance, it could be advertising. You may need to up your advertising in a particular advertise one particular service. If you see that you're not generating the revenue you should receive or you didn't receive last year within that month, um, so it can be comparable. I also do month to month as well. Why did revenue increase this month in comparison to last month? Why did it decrease this month in comparison to last month? So those are some of the things that you should look at when you're analyzing your financials. And another thing you look at is, for instance, your payroll accounts. Look to see the trends with your payroll accounts, your advertising accounts, and of course your revenue. So just look at each individual account that you have on your profit and loss statement to determine if something doesn't look right. For instance, I know one client I met with, one of his accounts was when we compared last year's to the current year and month to month, we noticed that it didn't look right because it increased drastically. So it was a quick fix because only thing was is that that account was not, it was a transaction that was not categorized correctly. And so those are some of the things that you can find when you analyze your financial records on a regular basis. Mm. Another thing is the balance sheet. Look at your cash. Your balance sheet shows your cash. It shows the amount of money that is in your bank account, your savings account. Compare those numbers to last year's numbers. Compare those numbers to the prior month numbers to make sure that you are on track with the cash that's in your account because um, your cash that is on your balance sheet will be different from your revenue. Those are two different types of they tell two different types of stories. So your cash is what you have on hand. It is what you can have access to. Your revenue is what you're bringing in for the services that you've provided. Your cash is what you have to pay your liability accounts, to pay your, if you have a note, if you have a loan, so these are some of the things that don't show up on your profit and loss statement that your balance sheet will show that you should analyze to make sure you're on track, make sure you have enough cash in the bank to cover your not just your expenses, but also your liability accounts, your credit card statements, your loans, your notes, anything you may have that's out there that you have to make payments on that's not showing up on your profit and loss statement. Let's see, do we have any questions? No questions. Okay, so the next thing we will look into is your receivables. So when analyzing this is one thing I like to stress is analyzing or reviewing your accounts receivable report. So on your in your accounts receivable report, what this will tell you is services you have provided, invoices you have distributed or put out there for your clients to pay you that have not been paid. So this is money you're waiting to receive. And so if you don't review this, then you can have a payment that is out there or an invoice that's out there for a period of time that you haven't received the payment for. So it is good to review this report to make sure that you are receiving or you are collecting the funds that you should be collecting for the services you're providing. Another thing is that with group homes, you deal with insurance companies a lot. So you will bill the insurance company for services you've provided. Now we all know that insurance companies do not pay you um, right then and there. It may take some time. So for instance, reviewing this report will allow you to recognize those payments that you have not received from the insurance companies, and also how long these insurance companies are taking to pay you back. So, and then it would allow you to go in and file a claim if you need to in the appropriate amount of time instead of waiting until the end of the year and notice that you haven't received the payment for an invoice or payment for a service provided. This would allow you to go in and actually analyze or submit a claim or submit collection letters or whatever you need to do in order to make sure you receive the funds for that revenue, for the service you've provided. Can I see if we have any questions? No questions as of yet. The next one would be to the third thing that I would suggest you look into right now, with it being the middle of the year, going into the third quarter, is to assess your cash flow and and forecasting. So, as I mentioned before, is that revenue is not the same as cash. So, your cash flow statement, it will outline the actual cash that you have on hand, your debt that you have to pay, your liability you have to pay, your expenses you have to pay. So it outlines all of your um I don't want to say expenses, but all of the money, it tracks the money coming in and the money going out. So it makes sure that you have enough cash available to take care of your debt and your operational expenses. And so and then also another thing is to forecast. So it's good to be able to provide a forecast. Like since we're in the third quarter, we should have forecast out into the end of the year. So with that, you should have a prediction of the revenue you're going to receive, what you're going to do to receive this revenue in order to be able to handle your money going out, your debt, your liability accounts, your expenses, your operational expenses, your payroll. Make sure you have money on hand to pay your employees, to pay your contractors. So this is what forecasting can do. It allows you to make sure that you're going to be able to stay in business, that you're going to be able to pay your employees, be able to pay yourself by the end of the year. So that's why assessing your cash flow and doing forecasting predictions are important. Now, the last thing is to evaluate your profitability by service line. Okay, so what this is that it's good to analyze the services you're providing and to ensure that you're receiving profit for those services that you're providing. This allows you to analyze your services that you are providing and making sure that these services are generating a profit, a revenue. Not only that, but and I said profit. So basically, when you are analyzing your services, you want to make sure that you have the that you are bringing in a revenue to cover the expenses for that service. So this is like cost accounting. If you go into cost accounting, it's service-based driven. So you want to look at even contractors. Contractors do this a lot as well. So you want to look at the service that you're providing, and you want to make sure that the expenses that's associated with that particular service is operating at a profit. So for instance, I know for home care agencies, different service lines you may have. You may provide room and board, right? So that's a service that you're providing. You may provide respite services. You may provide home care may be a line just by itself. You may provide companion care services. So these are some different services that you will that will help your company generate revenue. But the thing is, when you are, for instance, we need employees to cover each one of these services, correct? Um, Even with if you have a group home, you want to make sure that your revenue you're bringing in for these group home services will cover the expenses for your home. You want to make sure you're able to pay the employees that you have in this home to take care of your clients. So this is why it's important to look at your cost report, not just to to look at your profit and loss statement. I'm sorry, I said cost report because in home care services, if you have Medicaid clients and Medicare clients, you have to submit a cost report. And if you keep your records in this type of order, it would assist you to prepare your cost reports in the manner that it should be prepared because cost reports are pretty much reported on a cost basis. So the revenue that you're receiving, they want to know the expenses that are associated with that revenue and that your revenue is covering those expenses. So I think I explained it correctly. I think I explained it to where you can understand. If not, please let me know. So those are the four areas that I wanted to cover today, which are to cover to help you with the end of the year, help you with your finances and what you should be looking at for this third and fourth quarter. So the things that we did go over is to review your year-to-date financial reports. This includes your balance sheet and your profit and loss statement. This includes cleaning up your outstanding receivables. Um, Putting out those collection letters, making phone calls to those that still owe you for the services you've provided, contacting the insurance company for funds that have not been received yet for services provided. So the second thing is to clean up your outstanding receivables. Next will be to analyze your cash flow and forecasting, and forecast for the last 2 quarters of this year. So make sure that the money coming in is covering the money going out. The money you, yeah. The money coming in versus the money coming out, and also forecast. Make sure that you have enough funds or that you have a plan in place to receive revenue for services provided that will cover your money that's going out. Next will be to evaluate. So the fourth thing that we went over was to evaluate profitability by services. So making sure that the services that you're providing, the revenue that you're receiving for these services will be able to cover the expenses that are associated with that service, making sure you can pay your employees any training that may need it. Your employees may need training for services that's provided. So you want to make sure that the money you're bringing in will cover the services that you're providing by line, not looking at your revenue as a whole, but looking at it by the service line. So I've covered these four areas. If you have any questions, you can still contact me. I hope it was helpful. And I do provide these services as well. So if you need help with your books, if you need help with your predictions and getting ready for the end of the year, please contact me. I am available. Thank you for sitting in and watching the live. Thanks.